Hi there, so this is the video that we're going to concentrate on pension contributions and how valuable they can be. So we know that the more you put into a pension, the better off you're going to be, but let's put some figures in there. I was just talking to someone the other day, what might happen to them and their pension pot. So this particular person, they were making contributions, they were 30 years old and had a salary of £30,000 per annum. Their total contribution, of which they made a 3% contribution as the employee and the employer made a 5% contribution, was £200 a month. So that was going to go into the pension every month until, let's say, they were 65. And in terms of what that would get them back, in terms of pension pot, roughly, and these are rough figures, don't rely on them, but to give you a good idea, their pension pot was going to be £300,000, so quite a lot of money to provide their income when they're no longer working. However, they did say to me that maybe if I put a bit more in, I might get a bit more back. So the example of an extra £50 per month was used. What benefit is that going to have? Let's just use a different colour. So that £50 was going to go into the pension scheme and giving a total contribution of £250 per month. And then at 65, that pension pot was going to be roughly £375,000. And that does assume their contributions are going to increase by inflation every year as their salary goes up, hopefully. So you can see there quite a big difference, £75,000, and that's probably going to last you a lot longer and enable you to have hopefully a better retirement when you get there. There's another benefit for making pension contributions as well, and that is effectively, with your contribution you get tax relief. And let's just look at that £50 to have a look at how it works. So the £50 a month that this person was going to make, it goes through payroll if they're an employer's pension scheme. 20% basic rate tax is automatically taken off, and that would mean that particular person is going to put £40 a month into the pension scheme. The 20% that's normally going off to HMRC is actually automatically redirected into their pension scheme. So 40 plus the £10, which is 20% of 50, add those together gives you your original £50. So that's a really efficient way of saving. It's only costing them £40 to get £50 back into their pension scheme. And you can see there the added value of putting more into the pension scheme. If you're a high rate taxpayer, you can reclaim potentially more tax relief, so it's even cheaper. So there's great benefit of making extra contributions. You're likely to get more back, and it's a very efficient way of doing so as well. Thank you very much.